Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange, and I am joined today by none other than Bruce Campbell with Stockhouse Investment Management. Thank you for joining me, Bruce.
Yeah, it's great to be back after a little hiatus.
That's right. So for those of you that used to watch us, we had a show called Market Recap. We came to you every week virtually because Bruce is based out of Kelowna, BC, and I'm based out of Vancouver, and we would discuss what happened in the markets that week. We would talk about stuff in the US on a global scale as well as at home in Canada, and stuff that would affect the junior markets. We would also talk about CSE issuers and various trends that were happening. We're coming back to you in 2025, but we're going to change things up a little bit. Bruce, are you okay with that?
Yeah, we sure are. Yeah.
We're going to move to a monthly show, so it'll be an episode every month, and we're going to dive every month into a specific theme, and a theme that will be trending. So as you're looking to invest in various sectors in the junior markets, hopefully we will be able to bring you lots of information that can help you in your due diligence process. Let's start off and just talk a little bit about 2024. We're going to start next year with a monthly episode that will officially begin in February, but you're coming to us now in early 2025, where we're just going to talk about what happened last year. We're going to talk about maybe what to expect this year, and get you all geared up for the first episode of 2025, which will be coming to you in February. In 2024, the Canadian Securities Exchange, if you don't mind if I start there, we had pretty active year for a quieter market. We had lots of new issuers that kept coming to list. We had lots of financings that happened. We'll get into those later. We also were fortunate enough to celebrate our 20th anniversary. You came to our 20th anniversary party. Thank you for making your grand entrance. And we celebrated being 20 years as an exchange. We've been very fortunate to grow very quickly over 20 years. We're a young exchange, but we've had a lot of support from the community. So that was an honor for us to get to celebrate. We celebrated in Vancouver. We celebrated in Toronto. We even celebrated at the Stampede in Calgary. We also did a rebrand. We got a new website. So there's lots of new stuff to explore on our website at www.thecsc.com. So make sure you check that out. We also became a member of the World Federation of Exchanges. That was a big pinnacle moment for us. It allows us to be recognized by our peers globally. Our CEO, Richard Carlton, even traveled to the AGM for the World Federation of Exchanges in Kuala Lumpur. So it was exciting to become a member of that and amongst our peers there. We also, we put out a new policy book that came into live action in 2024. The new policy book covers lots of exciting stuff that will help our issuers further. But one of the exciting parts of it is it allowed us to build a non-venture or senior tier to our exchange, which allows us to help our big issuers and provide them with the same service that they get on other non-venture tiered exchanges. So that was very exciting for us. Bruce, let's dive into what you saw in 2024 from your perspective as a fund manager. Obviously, you have Stockhouse Investment Management. It's based out of Kelowna, and you're very active in all sectors. But let's break down a little bit of what happened in 2024 first. Where do you want to start? Do you want to start from the political standpoint, or do you want to talk about gold and interest rates?
Well, let's talk a little bit about gold and interest rates.
Okay, let's start there. Yeah. Let's talk about gold prices. What do we see?
Yeah, I mean, what we saw was that for quite some time now, gold has been basing where it made a move up and then it's been going sideways. And this was the year that it actually broke out and started hitting new highs, higher highs along the way. Gold likes to bop up and down, but as inflation was, continuing to rise, now there's been more focus on gold and where investors should be in that gold market.
The gold bugs were very happy because their prediction was finally right.
Yeah.
But one thing that I wonder about is we did see gold kind of hit these all-time highs, but we didn't necessarily see it percolate down to the junior markets or the explorers. Any thoughts on why we didn't see that happen?
Yeah, I mean, there's a few things at work there, right? One is that, gold has hit this new high, and you would just sort of automatically think if gold's at high, well, all the stock prices should be at highs as well. Well, there's been a few, things you have to sort of dig into there, right? So what are their costs? Because their costs have continued to go up. And what are their costs relative to the price of gold? So, if they had this much margin before, do they have this much or do they have that much, right? So that's a big factor as well. And then I still think that there's a huge flow of funds issue, right? So what we've looked at this year and really for the last 18 months There's been a lot of discussion about, Mag 7 and big cap stocks. And that still is where a lot of investors like to be positioned and haven't really gone down cap to the same degree yet. We've seen that a little bit in the gold sector especially with companies that have had good drilling results or had really strong earnings results. You've started to see them move up, but there hasn't been a whole lot of money that's flowed into pure exploration yet. And that's something that I think is about to change. And it looks like that could be, another area to watch this year in 2025.
Well, speaking about the explorers, I mean, it was probably our largest growing sector on the exchange in 2024. There's a lot of companies that are out there and primed and ready to go. They were able to do some great little financings and keep some, work programs going. So if it does make its way down there, there's a lot of companies primed and ready for action when that does happen. So hopefully we see that in 2025. So we'll definitely be watching that closely, right?
Yeah, for sure.
Okay, let's talk about interest rates.
Okay, yeah.
What happened there?
Yeah, I mean, interest rates have been the theme for the last really 3 years, right, in the market, in that, we started to see interest rates in the bond markets moving up back in 2021, and then the central banks all followed suit with interest rate increases in 2022. We saw inflation peak out, and now we've just started to see the cresting of those interest rates. And so if you look at Canada and many other jurisdictions around the world, they've been a lot more aggressive at bringing interest rates down because they've had that room both from an inflation standpoint. Inflation's come down and become more manageable, but also, and probably because of their economies being a little bit weaker. And Canada is a good example of that. In the US, they haven't brought interest rates down as much because the economy's been stronger, and inflation at the same time hasn't moderated the same way. They have this 2% target that they want to hit, and inflation came down close to that, but now it looks like it's kind of rising, and it looks like it could probably stay in a range that's a little bit higher than that. So our personal view is that we're not going to see huge rate decreases from the Fed unless we see something happen with, more with the economy in the U.S.
And just to break it down for our audience, the reason that we increase rates is to put pressure on inflation rising, right?
Yeah.
They have an inverse relationship.
So they're trying to actually slow things down and not bring it to a halt or drop it off the cliff. And to be honest, they've really done a great job of that in this case, in the U.S. in particular, but even globally, you haven't seen economies just completely collapse with, the high inflation and high interest rates. We've been able to, bring inflation down and not crash when this has all happened.
Absolutely. Now, one thing is we saw this happen in the past. I mean, one of the most notable ones was in the 80s when they brought interest rates up. Interest rates were close to 18%, was it?
Yeah.
And that was really to hedge inflation was the purpose of that. And it took a lot longer. Do you think that we are getting quicker at being able to resolve these types of pressures? Because this seems like it was fairly quick. They had a fairly aggressive increase in prices. Was it 2023? There was
2022, yeah.
2022 was when we had the aggressive increase. And so do you think that we're getting faster at these corrections?
I mean, certainly they acted quickly in this case. We saw rates go up at one of the fastest accelerations in history for sure.
That's right.
The thing that we'll have to really watch and see is whether or not inflation's come down and it starts to, kind of wave up a little bit. I don't think it's going back to 9% where we saw it, back in 2021. But I think what we could end up seeing is, that it dips over the 3% level. And you think about sort of the cumulative inflation, it still has been pretty strong because we hit 9% and, now we're talking about it's only 2%. But keep in mind that the 9's not off. It went up 9 and then, the next year it was up probably 4.5 and now it's up 2 on top of that. So it all adds up.
That's right. Absolutely. And I guess it also changes things. One thing that maybe we saw in recent past is that interest rates, they really stayed at the same level for a very long time. So I think as consumers, we need to adjust a little bit the fact that we live in a more movable interest rate state, right? So having variable interest rates is a bit of a different game than it was only a few years ago. It'll definitely be interesting to see what happens next year with interest rates. And I'm sure another thing that we'll be watching very closely as they do end up trickling down and affecting the junior markets at some point. Let's talk about an interesting thing that we all watched happen this year, the U.S. political stage and the transfer of power that occurred. Tell us what you think about this, Bruce, and how is this going to affect us?
Yeah, I mean, the big thing is going to be uncertainty and what the U.S. president is going to throw at us here, right?
Yeah.
I mean, that's the biggest thing is that, immediately came into play and was like, okay, we're going to have tariffs. And then, what else is going to happen? And he does tend to kind of shoot from the hip a lot more than what you would typically think of as most politicians who are a little bit more measured.
Yeah.
So, I mean, that's one factor. The other is that, he does also tend to be very pro-business.
Yes.
And so that's very stimulative in a lot of ways. And in November, we actually are in December, but the November data, after he got elected, the sentiment of small business jumped at one of its highest rates ever in history because all these small business owners, which is 98% of business in the US, were optimistic about what Trump would mean for their business. So, I mean, that's a great trend, and that's something that, trickles through all aspects of capital markets.
Now, one thing that did come up at the end of the year was he not that he's in a position to change anything as of the end of the year, but there was discussions on tariffs on Canadians. Do you foresee this affecting the markets at all if this does get implemented?
Yeah, I mean, there's pretty strict talk of tariffs and what's planned there. And it'll depend on how they're implemented and, what contingencies companies have to deal with that. The one thing that, we'll have to gauge is that's going to be inflationary for the U.S. as well, because, if those are goods that are coming into the country, then they get that tariff added onto them, and it means the price is higher. I mean, if they can produce it in the U.S. and sell in the U.S., then that won't be the same amount of issue. But can they meet that demand for products with their U.S. business? So immediately it could have an impact on inflation and then thus interest rates.
Right, absolutely. And I mean, obviously there's a lot of dependence on us for our natural resources. So I'm sure that it'll affect that sector in some way, shape, or form, whether it be for them or for us, right?
Yeah, exactly.
Yeah. Okay, well, when is he in office officially?
The 21st, I think it is.
The 21st. All right. Well, we will watch and see what happens there. On the note of Trump, the next point is timely. Let's talk about Bitcoin and what we saw happen this year, because that was somewhat aligned with the timing of the election and some of the important people he's brought into his close circle. So tell us what happened there.
Yeah, I mean, we saw as the polls started to improve for Trump, the price of Bitcoin started to move, and then after the election, it just went, almost straight up. He's talked about the fact that he wants to be very pro Bitcoin, and he's put several people around him who have big sort of influence in the Bitcoin sector, and so it's really shone a light on really the amount that Bitcoin is kind of being accepted in not just in the U.S. but worldwide.
Yeah, absolutely. I remember listening as we were leading up to the election. I remember hearing about investments that were being done by some of the really big firms. I heard BlackRock had put in some bid for Bitcoin in at least hundreds of millions, if not billions. So there was a lot of support and plays on Bitcoin that were happening leading up to the election, planning to get some major gains if Trump got in, which kind of showed us that there was a lot of belief that Trump was going to win that election, but also that he would affect Bitcoin, and both of those things did happen. So the outcome did come to fruition, and it created some pretty amazing levels for Bitcoin. Do you think that cryptocurrency will now see a new light in 2025? Do you think that it's got a new seat at the table?
Well, one thing about cryptocurrency is that it does tend to be very factored based on the sentiment of the markets, right? And I mean, if we go back in history, you look at 2021 when the markets were, the animal spirits were really wild and Bitcoin was making a big move then. And then in 2022, when, it was everyone was on defense, Bitcoin was going the opposite way. It sort of fluctuated a bit. And now as we roll into this period where there's a lot more optimism, Bitcoin's again had its move up. And, we can look at all the data, about, the limited amount of Bitcoin that's going to be mined eventually and things like that. And, it certainly seems that, its trajectory is one direction. That being said, it does tend to be volatile. So, if you probably have long time horizons and you hold Bitcoin, you probably just buy it and forget about it. But if you have any type of, trading or risk management ability, then you probably trade it and buy it and sell it as these sort of bigger waves happen in the long trend.
I find it interesting, and this is just from my personal experience, is that the people that I know that have been resistant to get into investing in the markets are not as resistant to opening up a crypto account or wallet and investing in crypto. I find that interesting that there's a lot more openness to it than there is just into public companies and in the market. So it certainly has some legs behind it, that's for sure.
Yeah.
And I'm sure we'll keep watching that. On that note, let's move into AI. We kind of really saw ChatGPT come to the market in 2024. I'm sure it was there a little bit before then, but it really has gotten life in 2024, which has also, evolved the AI space. So what are your thoughts around AI? And are we going to start seeing a bunch come to the junior markets in the space?
Yeah, I mean, it's obviously a trend that was started several years ago, but the mass adoption or the mass rollout of ChatGPT and now, some of the other providers that have come out with their own GPTs has really, brought it to the public, both on how they can use it, but then also thinking about new applications for it. And I mean, there's probably not a day that doesn't go by that you don't see another, specific app that does, one little niche thing with it. And you sort of have to wonder in 10 years time or 20 years time, how will we use it? And I know, right now there's tons of policy statements that are being written by, anyone from securities regulators to, to big businesses on how they'll use it. But I don't think it's going to go away. It's, the genie's out of the bottle, and it's, certainly going to be a productivity tool if nothing else.
Yeah.
And what that means is that there's going to be lots of innovation. So, the first wave was, everybody needing the power to run this AI. And I mean, that's where you've seen, NVIDIA and a lot of these chips all make their huge moves as their product was just getting sucked up as much as it could by anyone that could buy it. But now you're going to start to see, new applications in it. We've seen that on some of the listings and some of the exchanges where now you have companies that are focused in specific areas that have their own knowledge base that they've put into an AI, and it's going to drive a niche in their industry.
So one thing that we saw, a few years back was the kind of creation and rise in the public markets of the blockchain sector. Yeah. And I'm just curious what your thoughts are there, because what we saw is this, really quick intro into the blockchain space in the capital markets. There was lots of companies out there that were developing blockchain or utilizing blockchain. We were at the same time learning what blockchain even meant. It took me a moment to wrap my head around it. And then it really the bubble did burst at some point, and it's slowly been making its way back to the market. I think blockchain is it's implemented so much more now than it was before. We don't realize how much we're utilizing it now, but it's not necessarily ever really made its full way back to the market. Whereas AI, I feel like there's a lot more acceptance of AI, that it is just coming to market and it's coming full force. Do you think that there's any concerns there of any volatility with AI products coming to market, or do you think we're going to accept this one a little differently?
Yeah, I mean, just from a user standpoint, it's been more adopted because, it's easy to pull up ChatGPT or Gemini on
That's
your
right.
computer and start asking it questions or start asking it to help you do things.
Yeah.
Whereas, blockchain applications weren't something that we were like, how do we,
That's right.
make a blockchain for our lawnmower,
Yeah.
right?
Soon
Like
I won't even need you to do this conversation,
exactly right. We'll just have AI, right?
For the days that you're sick. Otherwise, I like having you
It'll
join
be like
me.
Max Headroom, right? But that adoption was much easier with AI. But what happens with everything is it gets pushed beyond,
Yeah.
kind of what is a reasonable level from a emotional and from a sentiment standpoint. And are we there? When will we be there?
Yeah.
Well, we're not going to know until after the fact.
Yeah.
But when everyone's talking about it, it's probably starting to get there. But you go back to the internet and like what was happening in 2000 and everyone was talking about it, and it really took another 15 years before that was really mass adopted.
Whereas this has been adopted almost immediately. I mean, in
a lot of ways, yeah.
If I've used it, then the masses must be using
Right,
it.
you weren't shopping online in 2001.
That's right.
It took you a little bit longer.
That's right. It took me a long time to get my Amazon account going. Okay, well, it'll be interesting to see how AI progresses in 2025. Okay, I also want to talk about life sciences. Look, you were one of the early adopters of investing into the cannabis space when it came to the markets. I think we really saw that come to the markets in 2016. So it's been in the markets now 8 approaching 9 years, right?
Yeah.
Time goes fast. And we really saw a little bit of a pretty heavy softening in the space, to put the least. So let's talk about what we're seeing. I know that you've done lots of due diligence on Canadian, US, and global companies in the cannabis sector. What are your thoughts on it? What did you see in 2024, and what do you think's next?
Yeah, I mean, it's been a crazy sector for sure. Like in the last 8-10 years, there's the ups and downs that have happened.
You had no gray hair in 2016.
Are massive. That's right. Yeah, it's all from investing and trying to figure out what's going to happen with cannabis. Yeah, exactly. So what do we see going forward? Well, I think that the trend over the next decade, 2 decades, is more adoption of cannabis being a legalized product worldwide.
Yeah.
But as we saw from the U.S., there's been so much political up and down, and even when you handicap something that you think is absolutely positively going to happen, it sometimes doesn't, but it will over time, I'm sure. And the example I can throw at you is Florida has been medically approved for quite some time, but they had a referendum at the presidential election level to have recreational, and it was almost thought of as like done deal, but it got turned down. The majority still was in favor of it, but it didn't hit their threshold number, so as a result, it didn't get approved. But does that stay like that? No, I'm sure if we examine it in the next decade, it's going to be that place. It's still a huge product worldwide that's consumed, and it's a function of moving it from a legal market to legal market.
Yeah.
And I mean, at some point in time, governments are going to want this because they capitalize on the tax revenue and they get rid of a whole lot of organized crime and black market activity.
The Fed, though, does still collect taxes, right? Does the Fed collect taxes from U.S. companies?
They do,
Okay.
yes. And I mean, that's part of the whole legalization process and trying to get through the 280E taxes because these producers still have to, submit their taxes, and it's quite onerous compared to if it was, treated not as a Schedule 1 narcotic. But what we're going to probably end up seeing is that, there'll be ebbs and flows, but it'll start to move towards mass adopted as all these politicians go, wow, there's a lot of tax money that we need to get our hands wrapped around there that is in the black market now, that if we legalize it, it will come into, and the Canadian market is a good example, right? So we started off, there was no cannabis, there was a huge cannabis market, but it was all black market. And now there's been lots of fits and starts and failures and, that type of thing.
It hasn't been a perfect road.
Because it got overbuilt. But if the winner of all this is the government and the excise tax that they collect, because it's massive.
Absolutely. Okay, let's talk a little bit about that because I think that's important to just emphasize as we go into what's going to happen next with the space. But really, what we saw is we saw the space really boom in the markets in for Canadian licenses and Canadian operations. Then we really saw the U.S. cannabis come to market. In the U.S., for those of you that are unaware, it is still federally illegal, but state by state they can choose if it's going to be medicinal, recreational, or not legal at all. And so I don't know if you know how many states now have it legalized recreationally, but it's a lot.
It's over 50%.
It's over 50%, and medicinally, it's
even higher. Yeah, it's in the
higher,
80s.
even higher than that. And so what we started seeing coming to market at the CSE, because the CSE opened their doors to U.S. cannabis companies that were legal in the jurisdiction that they were operating in, what we saw was this formation of what's called the MSO, the multi-state operator.
Yeah.
And the multi-state operator really was an opportunity for a company to prep for when there was full federal legalization, because then they would have operations all across a very large country with very good revenue opportunity. And so it was kind of all this prep for that. So I guess the one thing I want to ask you about the space is that we really saw this softening in the space. We saw a lot of investors leave the space, sell out. There was a lot of downward pressure on the stock. But there's something about that that's a little bit unique. And we were talking about this earlier, is some of the financials of these companies. So what are we seeing and why are we seeing it in those companies with their financials?
Yeah, I mean, what we've seen is just pure sentiment around recreational being approved, either from descheduling or from actually having it recreational approval in the U.S. And the thought is, it's just been pushed down the road now for multiple more years.
Who knows when?
Yeah. But at the same time, these multi-state operators continue to operate and have, more revenue. And in a lot of cases, they weren't, in a lot of cases, they still aren't cash flow positive, but because of the taxes they pay, but they're EBITDA positive. And in some cases, they're moving towards that cash flow positive. And if the law ever changes on the scheduling, the cash flows will go through the roof, and there'll be this huge, move up in share prices, because now the companies are going to be so much more profitable.
Yeah.
The problem is that every time investors have speculated that's going to be the case, boom, something comes. It
gets stopped.
Yeah, and it gets stopped, and then the stock prices collapse because of that. And it's, from what I understand, there's not a lot of institutional support, certainly across the board. It still tends to be a lot of individual investors.
Yeah.
And so until we get to the point where there's a mass adoption by institutional investors, that kind of puts a floor on prices to a certain degree, and then also provides an opportunity when things change.
And maybe you know this or maybe you don't, but do we know what Trump's thoughts on legalization are?
I mean, we don't.
I'm sure it changes daily.
Yeah,
but
it has sort of swayed back and forth, and I mean, even during the election campaign, there was talk of, him being more positive and the stock prices would go up, and then, oh, no, they're not, and then they'd come down. And it was lots of volatility.
Okay, well, we'll be watching that in 2025 for sure. And it is so great to have your insights, just because you have been so involved and so much due diligence. You had a fund in the space. You've been around it since it really came to market. So we'll definitely dive into that lots in 2025. Okay, let's move into a little bit of what we saw in 2024 as far as financing trends. Do we see any particular type of financing trends or anything to note that we should be paying attention to for next year?
Well, I mean, the big thing was just the direction change, right? In that, going back to 2021, things were really active financings. Yeah. And then into 2022, they dropped off a lot. In 2023, they almost came to a halt.
Yeah.
And that was not just in junior markets, small cap markets, that went all the way up.
Yeah.
If you look at the amount of IPOs that you're seeing, even in big cap, that just isn't happening.
Yeah.
And now that's starting to change, right? There's, a little bit more money that's starting to flow into financings. It's nowhere near what it was in 2021, but maybe that was, something that we have to work towards to get back to.
Yeah.
But it's starting to improve. And I mean, these things tend to be trends that last long periods of time. It's not like this.
That's right.
You know, bigger waves. It's like that super tanker analogy.
Yeah, absolutely. On the CSE, some of the financing trends that we saw in the past year was of our 775 companies, we saw over $1.7 billion raised from our 775 companies in just over 1,000 financing. So, I mean, these aren't massive numbers, but they're active numbers. So every single one of our issuers, on a per capita basis anyway, our issuers have actively been raising money over the year and continuing their operations. To me, this is a really good sign. Is this promising?
Yeah, I mean, especially when you look at kind of the state of the markets and where they got to, now there's money starting to flow in again. So people have gone from where it was just strictly large cap investing of stuff that was listed on exchanges to now they're investing in financings and they're putting capital into, a lot of cases, the small and junior and emerging companies.
Yeah, absolutely. And we're starting to see some alternative stuff. We always see around this time of year, we see some flow through stuff come through. I feel like in Canada, the life financing exemption really started coming to market. Yeah. We saw a lot of those. And we saw mostly in mining. Would you say that any other sector got a lot of attention this year in the financing space?
Yeah, I mean, it was pretty spread around. But going back to the life financings, one of the things that we saw was that, a year ago or maybe 18 months ago, the life financings wouldn't get to the 10 million mark. And now what we're seeing is, they're getting to the 10 million and then they're raising more than that isn't under the life flexibility. And we just didn't see that before. And now, the financings are getting bigger as well.
Yeah. For those of you that don't know, the life exemption it's fairly new to the market. When did it come out? About a year and a half ago?
Yeah, probably around 2.5 years ago. Yeah.
Okay. So it's a listed issuer financing exemption. So it is meant for existing listed issuers that have gone through 12 months of being a public company. Yep. And it gives them an easier way of going back to market and raising capital. And it gives the shareholder who invests in it, they don't have what is typically a 4-month hold on a private placement. So it gives them immediate access to the market and be able to trade when they want without waiting that 4-month hold. And there's various rules around how much you can raise and when you can raise it, so on and so forth. But it definitely is something that we've seen picked up in the markets and been really helpful to our existing companies to go back to the market and do it. Do your investors like life financings, or how do you feel about it?
Yeah, I mean, the life financings have been interesting because, like, up until now, they've, capped that $10 million range, or I guess depends on market cap too. And so it was not this like open-ended amount that they were going to finance, which from an investor standpoint, we want the companies to have money, but we don't want them to dilute too much. So
which is something we saw in the cannabis space.
Yeah, which we sure did. Which is something that's kind of interesting. That when we see that level being, kind of capped, now it's starting to go beyond that, which has another dynamic to the market because there's more flow and there's more interest. So that's positive as well. But it's, kind of interesting to watch, and we do like them because quite often they give us, almost like exclusivity in a deal.
Yeah, absolutely. Okay. I want to talk about 2025. We're in a new year, Bruce. So happy New Year.
Yeah.
And I want to talk about some of the trends that you think we're going to be looking at this year. Obviously, our first official episode will be coming out in February with a new look. We might even have a new name. We're not sure yet. We have very intelligent people who are out there working on that now as we speak. So stay tuned for that. But what are some of the trends that we're going to be watching in 2025?
I mean, there's a lot of sector rotation. I mean, we saw it in 2024, and I think that sector rotation probably continues again this year. So watching those trends to see, where money's flowing, where opportunity is, and that's based on valuation, it's based on money flow, and it's based on, kind of overall economy. So that's, one of the things that is going to be really kind of fascinating to watch.
And that's something that you watch. You've historically always watched. When we had Market Recap, you would walk us through that a lot. So we'll still get to touch on that because we'll walk through it episode by episode. As we're leaving a sector and we go into another one, you'll be guiding the ship on this one. Yeah. What else should we be looking at?
I mean, politics is obviously going to be a big one. Both, in the U.S. where, they have a new president, and we'll have to see what he brings. And then even in Canada here, it's going to be interesting to see what happens. There's a lot of political pressure on our prime minister and kind of what he's done or hasn't done, and how we get that productivity back in Canada and what we're going to do. And from a sentiment standpoint, the world has just kind of left Canada.
Yeah.
And so if we start to see a change in that sentiment and belief that, we're going to get that productivity back and we're going to start making changes, money starts to flow back into Canada. And it doesn't have to be, that it goes from here to here. It can be that, it's going like this and it starts to trend up. And then that rate of change is what investors like to look for.
That's right. The snowball effect in opposite.
Yeah, exactly.
That's really exciting. Well, listen, Bruce, I'm so excited to be bringing this back with
Yeah.
you. Thank you so much for all the time that you donate to the CSE and to our viewers. We're excited to be in partnership this time around with Stockhouse Publishing. So thank you to everyone at Stockhouse for participating and helping us bring this back to life. Bruce, I can't wait to get things going again. Thank you so much.
Yeah, it's going to be great with our themes for sure.
And if you want to make sure that you don't miss an episode, make sure you go to CSE TV and hit the subscribe button, and we will let you know every time an episode comes out.